Dua is joining us now from Sharekhan. He looks after the PMS of that. Of course, it's a BNP Paribas company now. Gaurav, afternoon. Good to have you. So, Gaurav, there are two schools of thought right now. One believe that markets have run up quite a lot from the recent lows of 16,800 thereabout. So, time to book profit. At least take some chips off the table where your mid caps have run up 40-50% or more. The other view is that market is now setting up for a much more larger expansionary move. So if the falls happen from here on, they are much more shallower. So don't get into trying to time the market because the inflation stuff has peaked out, earnings are good, flows are back, and 6 months from now rate cut cycle perhaps will start. So if there's an expansionary move which lies ahead, you should be focusing more on that. Which side of the argument would you be on?
So I think in a this bid to time the market, most of the guys have actually been out of the market, have been on the cash, and the last 1,000 odd points upside has been missed by them. That is point number one. Point number two, yes, I believe I'm on the side that we are on a multi-year upcycle, and for next 4 to 5 years, Indian economy and the stock market looks extremely good. So don't miss the big opportunity in a this thing, bid to buy 2%, 5%, 8% down. It will not make any sense. Having this thing said, this in the near term, what we see is that we are likely to be in a range. Markets after almost 2 years have broken out of the 16,000 to 18,000 range, and after having broken out and stayed over the 18,000 kind of a level, the activity in mid cap and small caps have improved. We see that after almost 18 to 20 months of pain in mid cap small caps, we believe if you buy the right kind of mid cap small caps with at least investment horizon of 18 months to 2 years, this is going to be an extremely big opportunity, because a lot of good quality stocks with earnings outlook of 15 to 25% are still available on trailing price earning multiple of 15, 18, 20, forward of 14, 15, 12. So I think mid cap, small cap offer a lot of opportunity, and we have also adjusted in past 4 5 months our holdings accordingly.
Gaurav, let's talk stocks and let me qualify that these are not your buy or sell recommendations. I want to understand taking a name only for reference, but the business which lies behind that. APL Apollo. There
So
is a
you
lot
see,
of
rather than going
yeah.
into stock specifics, Ajay, what I will say is, if you want to play the 4 to 5 years of this upcycle in India, you need to be overweight on engineering, capital goods, financials, basically, select companies in the space of this in building material, consumer companies. So these are 4 5 large spaces which are going to basically outperform in next 2 to 5 years. And if you see our picks, what we have added in last few months, all are largely from these spaces.
Understand the pipe space in particular, because there's so many pipe companies which got listed also recently, but most of the universe of pipes, APL Apollo, Hariom Pipes, so many of them, Maharashtra Seamless, Tata Metallics, there is a lot happening there. What's the kind of thesis behind being bullish on these pipe names? Some of them which you have. We're going to
Yeah, so basically, APL Apollo is a play on the basic 3 to 5 years of upcycle that we see in the property market. It has been this thing, compounding story for everyone for past 5 to 8 years. This quality is pretty high. Its volume growth has been higher than the industry. The stock has basically been in a range for this past few months, and when it broke down below the this 1100 level for a short this time period, we actually saw that as an opportunity to say, buy this very good company, good ROC, cash rich, a story which can just keep growing on 15 to to this 18% kind of over the years.
Gaurav, I want to also talk to you about retail. There is one end of the consumption kind of spectrum which is doing very well, the premium side, affluent one. The not so affluent one, the mid to masses kind of end of the spectrum is not doing that well. Which end do you like as far as retail business is concerned, which is also getting the mom and pop kind of retail, the big malls and all of that, super showrooms, they are also getting kind of disrupted to a certain way by online, but still you like one of the big retail stocks backed by the Tatas.
Correct. So what we have seen across the segments is that there has been a weakness in demand on the entry level side, lower end of the spectrum. However, we have seen extremely strong demand on the this premium side of the segment, luxury side of the segment, be it autos, be it this thing, others like like this thing, garments, and to simply that kind of an upside rally, we believe that this trend is an excellent play. They have been doing well. Lately there is initiative in form of of this Zudio has been doing extremely well and gaining market share over the other players. So we always like those kind of players, company who are able to break into a market segment and start gaining share. So a market share, wherever there is a market share improvement, steady growth, quality is very good of the company management. That's where we believe that investor can make very good wealth over for this period of time.
Saw this power sector completely get related in the last 2-3 months. Power generators, power financiers. You have one power financier in your portfolio and you're bullish on it. But the basic trigger behind would be power sector growth. Why do you like that?
So we about 1.5 years back, we were probably one of the few who had taken very large exposure into public sector banks, and that has this thing played out excellent. This very well for us. And there the whole argument was that those stocks are available at price to book of 0.4, 0.5, zero point 0.6. Worst was over, and there was no way that from that level you can actually lose money. We have displayed that upside, and now we believe that same kind of story is there in these kind of stocks, which are still available at 0.6 times, 0.5 times. They have seen improvement in their NPAs. Worst is over. Moreover, in quarter 4, we have seen they have started getting right back. So, Power Finance showed around 494 crores of right back in Q4. So, I think these kind of stocks can easily give you with very large margin of safety, very healthy returns.
One last question, Gaurav. I think you're running two strategies. One is the large cap tilted, and the other one is more small cap, mid cap. Is that correct?
So we have primary, our flagship product is Prime Picks multi-cap strategy. However, this strategy is more oriented towards large cap and mid cap, and we have relatively very small exposure to small caps.
Hugo, what is the earning visibility of your portfolio looking? Blended portfolio growth, earnings growth of your portfolio, does it, sitting now, does it give you confidence at 20-25% or 18 to 20%? What kind of visibility do you have?
Yes, of course. When we look at our holding, we are very clear that we will grow at higher than the consensus estimate growth for for this Nifty. So Nifty, if you see, is 13 to 14% kind of CAGR growth over FY 23 to 25. Whereas if I look at my holdings, they are likely to likely to grow by 18%.
Gaurav, we'll let you go on that one. Thanks so much for joining us. 18%.